Rail Vikas Nigam's IPO opened for subscription today. The government intends to raise 477 crores by selling 12.2% stake in the company. Soumit Sarkar spoke to the management and began by asking them about the growth in the order book. Let's listen in.
Out of 77,000 crore work, about 30,000 crore work are those which will take longer time to complete. About 5 years to 7 years, and balance about 40,000 crore. We are working to complete them in next 2 to 3 years.
What is the average time completion for this entire order book of 77,000 crore?
That will go from 5 years to 7 years because the long gestation period works, that particularly those of hilly terrain, Rishikesh, Karnaprayag and Bhanupali, Bilaspur work. Those works will take time because a lot of tunnel construction works are involved in that. In case of Rishikesh, Karnaprayag, out of 125 kilometer, we have about 105 kilometer track in tunnel.
Okay, now in the last 3 years, how has your order book grown, and going forward, what is the kind of growth rate that you're expecting when it comes to the order book?
The growth in order book is not very, not smooth. It takes a there are spurts. This year we had a spurt of about 8,000–9,000 crore. For a few years there was, for 1 year there was no order, and suddenly we got an order of 26–30,000 crore. So this is, there is no established trend how it grows. So it is purely at the discretion of Ministry of Railways, the order book grows. So it is based on the decision of Railway Board and Ministry of Railways. They decide discretion. They exercise their discretion in transferring work to Rail Vikas Nigam Limited.
So Ashok Kumar, can you give us some details on these margin levels for these orders? Like, do the margin level vary depending on the size of the order and the time period, or the margin levels are similar for all the orders?
See, we work on a model what we call management fee. Whatever we spend, we get a fixed percentage of management fees on it, and this rate is decided by Ministry of Railway. At present, we have two rate of management fees. One is 8.5% on the cost of work, and majority of our projects are under this 8.5 scheme. For Calcutta Metro, where we are working, we get a management fee of 9.25%. These are the two management fee, and this is the revenue stream. And our margins from our operation are almost fixed. It is around varies from 4.5 to 5%. This is almost consistent over the period of time.
Yes, exactly. I was seeing for FY15 to FY18, your average EBITDA margins were close to 4.8%. But going forward also, will this remain at the same level, or there could be some contraction?
See, it's a government policy, but our this management fee, it has been changed previously also, but every time it has been changed, it has been on upward side till now. It is on upward side.
Okay. Also,
shall I add?
Yes, sir, you can definitely.
My colleague Mr. Arun Kumar wants to say something more.
This 8.5 is basically the cost of establishment which any railway unit, that is construction units spread over the entire country of Indian Railways. They are the government departments. In each zonal railway there is one construction unit. So they are allowed a establishment charge of 8.5%. on the cost of the project, and that is from that at 8.5%. That 8.5% they spend on manpower and other expenditure required to be incurred for execution of the project. The same 8.5% has been given to RVNL also, and out of this 8.5%, whatever we spend on our establishment, that is our expenditure, and whatever we are able to save, that is our margin. So this margin, this 8.5% is presently applicable for almost all the projects except Calcutta Metro. Government may decide revision in any way. It may decide. Normally, we don't. Government may take a decision to vary it. So how they vary, it will only time will tell. So this is this 8.5% is not that fixed. The government may take a decision and vary it.
Okay, sir. Also, in your RHP, you have mentioned that you will be focusing more on orders related to hilly areas. So, can you explain why is this focus specifically on this region, and how does it benefit the company?
See, we are majority of the projects. If you see our order book, they pertain to doubling, putting additional line by the side of existing lines. These works are very, very difficult in nature, and number two, requires a lot of close supervision. When it comes to hilly terrain project, it is not interfered by moving traffic on the line passing by the side of the project. So there is no line. So that is a greenfield project where you once forest clearance and environmental clearance and other things are taken, then project there is no interference from other such type of thing like passing traffic nearby, creating hindrance in the project. So those are the projects where we can execute more work in 1 year, and even with 8.5% we can earn more profit. So that is how we are thinking of. We have this thing that going for hill area project will be more beneficial for us in terms of financial return.
Also, sir, Indian Railways has Aircon, which is also your peer and a competitor. So, how do you differentiate yourself from them, and how does the order giving process work here? Because after all, both are government Indian Railways companies. So, is there some kind of arrangement on who gets the orders?
There is no laid down rule. I will explain you. When a project is sanctioned, the first right of executing that project rests with the construction unit of respective zonal railway. That is, the government itself. Only when they feel that this particular project will be better executed if it is given to a PSU, they look towards us or towards our Aircon. I will tell you that prior to 2015, no work was being given on assignment basis to PSU other than RVNL. From 2015, in 2015, we got some work, and few works were given to them also. And it was purely as per the discretion of Ministry of Railways. So we got majority of them, but they also got those works, some of the works. So there is no fixed system or policy or laid down policy that how these works will be distributed among the PSUs. So that is the state of affair today.
Okay. Mr. Ashok Kumar, on the balance sheet side, if you see, we have a total debt of close to 2,800 crore. But most of this is from IRFC. So is this a pass-through debt? Can you give us more clarity on this part of the debt?
Yeah. Yeah, it is purely pass-through entry. See, some projects, Ministry of Railway has decided to fund some of the projects through IRFC money alone. So there is a tripartite agreement. Entire repayment of principal and interest is borne by Ministry of Railway. It is only the money comes from Ministry of Railway and we immediately pass it to IRFC. It is just a pass-through entry. It is not a debt for RVNL.
Lastly, sir, you have been paying dividends for the last 5 years. Can investors expect the dividend policy to continue for the company and such a good dividend amount coming in from the company going forward also?
See, we have been paying dividends since beginning. You have the figures for last 5 years, but right from beginning we have been paying dividend. And we pay dividend being a government company as per the policy of Finance Ministry or Department of Public Enterprises. And that we will continue, we are expected that we will continue to pay that dividend.